Hello guys, welcome to my YouTube channel. Today's discussion is going to be on another fun topic. It is preconditions for an audit, and this is also a part of SA 210. So guys, when an auditor engages into an agreement with the client, before he engages, he needs to take out certain preconditions. If these preconditions are satisfied, he should go ahead and agree the terms of audit engagement and enter into an agreement memorandum of understanding with the client. However, if these preconditions are not satisfied, he should not take up the engagement, he should not take part of the audit, and he should not conduct the audit. Okay, he should basically withdraw from the engagement. So what are these preconditions? The first precondition is determining whether the financial reporting framework is acceptable. You have to determine whether the financial reporting framework, which is the FRF, is it applicable, acceptable or not. I have already made a separate lecture on applicable financial reporting framework, in which I discussed that in India you use Ind AS and accounting standards AS, whereas in the UK you use IFRS, International Financial Reporting Standards, and IAS, International Accounting Standards, and whereas in the US you use US GAAP, Generally Acceptable Accounting Principles. So guys, basically for every country you have a set of FRF which you have to use. So you as an auditor should firstly determine whether the financial reporting framework is acceptable according to the country or the geographical location where the audit is being conducted or where you are being approached for the audit. Suppose in our example, let's take that you have been approached to do an audit in India. You are an auditor, you are a chartered accountant, and you've been asked to do an audit in India. So which IFRS or which financial reporting framework will you be following? You'll be following the Indian things, right? So the Indian things are what? Ind AS and AS. So these are the FRF which is acceptable in India. So this is your applicable financial reporting framework. However, if you want to understand applicable financial reporting framework's meaning in detail, you can please check out my previous lectures, previous discussions. Okay, now this is the first point. So here, if it is not acceptable, if they have used IFRS instead, so you should withdraw from the engagement, or you should ask them why. If there's some good reason, there's correct reason you think, then you can go ahead with the second point. But if you yourself you feel not satisfied, then you should just withdraw from the engagement. Second point, obtain agreement of management that it understands its responsibilities for next following points. So basically guys, so what we're going to do is, so you have to obtain an agreement, okay, of management that it understands its responsibilities. So basically this line, what do you mean? Management responsibilities. What does this sentence mean? Management responsibilities. So auditor has to obtain an agreement for management responsibilities, that the management knows its responsibilities or not. You should get an agreement. The auditor, as an auditor, you should obtain an agreement from the management stating that it understands its responsibilities very well. So now we're going to discuss what are these management responsibilities in the coming points. Okay, so to understand this, I have made a short form, PETA UA. The short form is PETA UA. These three, PET A, okay, this is the major point. PET. What is it? PET. What is PET? Preparation of financial statements, P. Okay. Second, exercising necessary internal controls to enable the preparation of financial statements that are free from material misstatements. And T is what? To provide the auditor. A is access to all relevant information, and U is unrestricted access to persons within the entity, and A is additional information that auditor requests from management. Now let's discuss this. So I've told you a technique to remember it. What is it? PETA UA. You can PETA, the spelling, there was a movie of Rajinikanth which released. The name of it was PETA. It has another T in it. So but how you remember it, like PETA, PETA. Okay, and there's also an Animals Act for PETA, remember, for Jallicut issue. So remember that, PETA. Okay, so PETA UA, or I remember it like movie PETA is a UA, underage. Okay, UA film, it is a UA film, under 18 also can watch it. So PETA is a UA film. So that's how you have to remember for preconditions for an audit. Okay. So the first point is, obtaining agreement of management that understands responsibility. The first point is what? Preparation of financial statements. I already discussed this with you many numerous number of times, that management responsibility is to what? To prepare the financial statements. They are the makers of financial statements. So preparation of financial statements is the first responsibility of management. Second, exercising necessary internal control to enable the preparation of financial statements that are free from material misstatements. Now you might think, what is internal control? For that I have given this definition of that. Internal controls are the mechanisms, rules, procedures. What are they? They are mechanism, rules, procedures implemented by the company to ensure the integrity of financial accounting information. It promotes what? Accountability, prevents fraud. Besides complying with laws and regulations and preventing employees from stealing assets or committing fraud, internal controls can help improve operational efficiency by improving the accuracy and timeliness of financial reporting. So basically these are what? Mechanisms, rules, procedures which are implemented by the company itself to ensure integrity of financial accounting information. Okay, and it helps in the overall operational efficiency. That's what we understood in this definition. Okay, so exercising necessary internal controls is to enable the preparation of financial statements that are free from material misstatement. So management should not just prepare financial statements, they should also exercise necessary internal control to enable that the prepared financial statements are free from material misstatements. The management should not only prepare financial statements, they should also exercise necessary internal controls to enable that the prepared financial statements are free from material misstatements. Okay guys, and then to also the management responsibility is to what? To provide the auditor. The auditor, when he comes to audit, he should ask the auditor before that in the precondition itself that I will have to get all access to relevant information. Later on you should not say that I can't get this access. So access to all relevant information. Okay, then you, what is you? Unrestricted access to persons within the entity. So basically you are going for an audit, you want to know more about this audit, you want to know more about the firm, you go inquire with the employees of this client. Okay, so these are the persons within the entity. Persons within the entity means the workers working there. You can ask them questions. You have unrestricted access. The management should provide the auditor unrestricted access to persons within the entity. Okay, the employees, the workers, the directors, anyone. The auditor wants to go and question, the auditor wants to go and get information regarding the audit, then he will get unrestricted access to persons within the entity. Okay, that's what this point is talking about. Access to all relevant information, whatever is concerning this audit, whatever the auditor thinks can help him to conduct this audit, all this is relevant information, and the auditor shall get what? Access to this. The management shall provide the auditor access to all relevant information, unrestricted access to persons within the entity, and additional information the auditor requests from the management. Other than this also, the auditor might require some additional information, and for this additional information you don't have any document or anything, so and you are not able to find or locate something, so you can ask the management directly, you can request the management directly as an auditor for this additional information. So basically, what are the preconditions of audit? First of all, determine whether the financial reporting framework is acceptable, applicable. Okay, first thing over. Second, what? Obtain agreement of management that it understands its responsibilities for three things. It's basically management responsibilities. Three things. In the three things, three things. You have the third point. You have additional 3 points. So I asked you to remember a term: PETA UA. PETA film is UA film. Okay. So PETA, preparation of financial statements, is the first responsibility of management. Second, exercising necessary internal control to enable that the prepared financial statements are free from material misstatements. You have to what? Exercise necessary internal control for that. What is internal control? It is a mechanism, the rule, the procedure which the client will implement in his company to ensure the integrity of the financial and accounting information. It helps in improving the operational efficiency. Okay. The third point what we read is, first is preparation of financial statements, second is exercising necessary internal control to enable preparation of financial statements that are free from material misstatement. The third is to provide the auditor. T is what? To provide the auditor. What should the management provide the auditor? Three things. AUA is left, right? PET is done, AUA is done, PETA UA. So A is what? Access to all relevant information. What is U? Unrestricted access to persons within the entity, employees, workers, whatever you want to talk to. The auditors can go and collect information. Last point, another A. What is it? Additional information that the auditor can request from the management if he wants to. Okay. So basically, what are the preconditions of audit we have discussed in this discussion. So essay 210 part 2 is completed, guys. If you have any doubts regarding the same in this discussion, if you have any doubts regarding some topic in this, so you can please post it down in the comment section below. Do please like, share, subscribe to my channel if you haven't already. Leave your comments and your thoughts, your feedback in the description, in the comment section below. Thank you so much. Aryan Shial signing off. Bye.